Hey, what's going on, guys? In today's video, we're going to be talking about some ETFs from Vanguard that you can start investing in for long-term growth. If you're not familiar with Vanguard, they're an investment management firm with hundreds of options when it comes to ETFs and mutual funds. So I'm going to narrow it down to my top 5 for consistent growth over time. And these ETFs are great for anyone who's just trying to find a place to dump money for the long term without having to worry about any short-term market moves. So throughout the video, I'll show you exactly what is inside these ETFs, how you could actually start investing in them today, and how much you could expect to make. So if you do like this video and find any of this information valuable, please do leave a thumbs up for me, and let's get into the first one here. All right, so the first one is a classic and pretty popular among a lot of long-term investors, because if you wanted to invest in the stock market, then this is exactly how you would do so. The ticker symbol is VTI, and this is essentially a total stock market ETF, which means that it tracks the performance of the entire stock market. So when you invest in this, you're quite literally just investing in the market and a small piece of every company. So this is by far the most diversified on the list, as it's made up of over 3,900 different stocks, with the total net assets coming out to $1.3 trillion. So this ETF consists of large, mid, and small cap stocks that are diversified across growth and value styles, so it has a little bit of everything. And if we want to break it down even more, here's an exact portfolio construction by weight. So tech is the largest holding, coming in at 27.7%. And then consumer discretionary, industrials, healthcare, and financials. So those are the top 5 sectors, meaning that the largest holdings in the ETF are stocks within those sectors. And then here are the top 10 holdings that make up just under 24% of the fund. So those are the largest companies in the ETF, so obviously they're going to be the heaviest weight, but the other 76% of the fund is allocated to almost 4,000 other stocks. So you see a pretty nice distribution here. All right, so that's what's inside the ETF and how it's constructed, but how much could you expect to make if you decide to invest? If we take a look at their average returns here, you can see on the top row, the 1 year has had a return of 30%, 3 year has had an average return of 18%, 17% over 5 years, 15% over 10 years, and since its inception back in 2001, the ETF has returned just under 9% a year. So those are all the average returns over a specific period of time. Now, obviously the market has exploded this year, which is why it's up over 30%. But even when we look back and see how it's performed since it was created back in 01, it's had an average return of 9%. And I know that 9% isn't anything that's too crazy. The other 4 that we're going to be talking about today definitely have potential to make a lot more. But since it literally invests in the entire market, it is a very safe place to put your money, and it's still a solid return for something that is that diversified. And I should also mention that the expense ratio is extremely low, coming in at 0.03%. So for $226, you're exposed to nearly 4,000 stocks. So if you're looking for a safe and reliable place to compound your money over time, this is a great option. All right, so next on the list, we have an ETF that allows you to invest in growth stocks in the S&P 500. The ticker symbol is VOOG, and it currently trades for $273.56. So this one is a little different than VTI, and you'll notice that some of the top holdings are fairly similar between the two, but this one has a deeper focus, more just on growth stocks rather than just investing in the entire market. VTI had almost 4,000 stocks in it, but this one actually only has 239, bringing the total net assets to $6.4 billion. This fund is also weighted much more towards tech stocks, as that's the industry where most of these names come out of. And if we want to break down the exact portfolio composition, here you can see 42% of the fund is allocated to tech, with consumer discretionary and communications coming in at a close second and third, around 15 to 16%. If we dive into the top 10 holdings of the fund, you'll see the textbook growth stocks that most ETFs have, like Apple, Microsoft, Google, Amazon, and Facebook. But we also have some other names like Tesla, Nvidia, PayPal, Adobe, and Home Depot. So definitely very strong companies with a lot of growth potential for the future. And since this fund is a bit more concentrated on specific stocks in the industry, the top 10 holdings do account for roughly 50% of the portfolio. So those are the types of stocks that you'll be exposed to if you do choose to invest in this ETF. But now let's take a look at what you could expect for returns. So if we look at this growth chart, the blue line represents the ETF and the gray line represents the S&P 500 growth benchmark. So this year we've had a 41% increase, which is huge. But even if we look back 3, 5, 10 years, the return is still very strong, ranging from 17 to 23% on average. And if we look all the way back to 2010, this ETF has had an average return of 18% a year, which is by far one of the best returns out there. For example, the S&P 500 generally returns around 8% a year, which is kind of what we saw with VTI. So this ETF having an 18% return over the past 11 years is crazy. So just to do the math, if you invested $10,000 in this ETF 10 years ago, this is how it would have grown. If we started here in 2011 with 10,000 and we just worked our way up to where we are now, your account would have grown from $10,000 to $50,000. And this is also without contributing any money to the fund. This return was simply from buying and holding the ETF. So if you were actively contributing to this fund, every week or every few months, you would have seen a much greater return. So these are the types of investments that you definitely want to be trying your best to contribute to every single week or every month, because over the years, you can make a ton of money down the line. And as you saw, it doesn't take a ton of money up front, just starting capital, to actually compound that over time and grow it into a very large amount. So that's another great option that I think every long-term investor should look into. But now let's get into the third option here. So the next one on the list is their tech ETF that trades under ticker symbol VGT for $411 a share. And if we take a look at the product description, you'll see that the goal of this fund is to track the performance of stocks in the technology sector, which includes stocks of companies that serve in the electronics and computer industries or that manufacture products based on the latest applied science. So the last one that we mentioned that was focused on S&P growth stocks was more weighted towards tech, but it still had a lot of other stocks in it across other sectors. So this one is 100% focused on tech stocks. There are 358 stocks in the fund, totaling $56.2 billion in net assets. And all of these stocks are obviously in the tech sector, but they still are split up into little subsectors like application software, communications equipment, data processing, etc. You can probably already guess what the top stocks are in this fund, but if we do take a look at the top 10 holdings, you can see that down towards the bottom of the list, we have some credit card companies as well as Adobe, Salesforce, Cisco, and Intel. And if you wanted to see a full list of tech stocks and just see everything that's in the ETF, all you have to do is click on this portfolio holdings button right under the top 10 holdings, and then you'll be directed to a page where you can see every single stock in the fund. So if you wanted to find some smaller cap ideas, that's how you would do so. So now let's get into how this ETF has performed over the past couple years. So once again, this year has been great and we've seen over a 40% return, but then you'll notice that over the past 3, 5, and 10-year average, there has still been a very solid return from 20 to 30%. And even if we go back to its inception in 2004, we have seen a 13.5% average return. So if we head back to their hypothetical growth table, you can see that a $10,000 investment back in 2011 would have turned into over $73,000 today. So over the past 10 years, this ETF has exploded as a result of the tech giants just continuing to develop and continue to grind higher. But tech is always going to be a good place to invest your money, and we're only going to see it advance in the future. So you really can't go wrong with ETFs like this. All right, so far we have an ETF for the entire market, an S&P 500 growth ETF, and a tech ETF. So now let's mix it up a bit and check out a smaller cap option. All of the funds so far have been more weighted towards large cap stocks. So now let's look at VBK, which tracks small cap growth stocks. And I really like this one because it's still very consistent like the other three that we just talked about. But I always like to have some exposure to smaller cap, up and coming names in the market because those are the stocks that have a lot of room to run. Sure, it's great to have a ton of money in stocks like Apple, Facebook, or Microsoft, but with these smaller cap names, those could go on to be very successful in the future. So let me show you exactly what this fund is made up of. There are 695 stocks in the fund, which comes out to $37.5 billion in net assets. The portfolio is fairly diversified across all major sectors with a little bit of everything in there. But one of the main differences here is that the top 10 holdings do not account for nearly as much of the fund compared to some of the others. We've seen the top 10 holdings account for 50 or even more than 50% of the fund, just because these large cap stocks have a much heavier weight. But when we look at this one, you'll notice that the top 10 holdings only account for around 7% of the total net assets. So that tells you that it is very diversified among those 695 holdings. So since these companies have a much smaller market cap, the fund doesn't want to have too much money in a single stock because they're going to be way more volatile. So I think that it's pretty cool that you actually have a good amount of exposure to all of the other stocks that are outside of the top 10 holdings. So now let's look at some of these returns in the past. And keep in mind that with smaller cap companies, really anything can happen, and Vanguard does have the risk set as a 5 on their scale, putting it in the higher risk, higher reward category. But even though they say it's higher risk, it's still a much better option than just blindly trying to pick individual small cap stocks on your own. That's why it's always good to have the majority of your money spread out in these large groups of stocks, because if you did choose to put, all your money into a couple small cap stocks, it's only going to take, 1 or 2 of those to go against you to really do some damage to your portfolio. So here are the returns that we've seen so far from this ETF. So over the past year, almost 46%, 18 to 19% over the past 3 to 5 years, 13% over the last 10 years, and just over 11% since it was created back in 2004. So pretty consistent returns, especially for a small cap ETF, where you always have that potential to make a lot of money any given year. All right, so that's one of my favorite small cap ETFs, but now let's get into the last one here that we're gonna be talking about, which is an S&P 500 ETF. So this is another fan favorite and very popular in the market, because if you do want to invest in the top 500 companies in the US, then this is what you'd want to look for. The ticker symbol is VOO, and this is essentially Vanguard's version of the SPY ETF that many of you probably know. And the way this ETF is constructed is pretty much identical to the S&P 500. So if we put these side by side and compare it to the benchmark, you'll see how closely all of the sectors are weighted. So when you buy this ETF, you're just 100% investing in the S&P. The top 10 holdings also matches the index, which totals 28.6% of the assets in the fund. And historically, this has proven to be one of the best places to invest your money to compound over time. The S&P 500 is the main benchmark index for the stock market. So if you're investing in an ETF that tracks those returns, you're gonna have a very consistent return over the years. So once again, here's the performance table where you can see the average return over the years, and you'll notice a very strong return of 15% since this ETF was created back in 2010. And the S&P 500 just hit another new all-time high this past week, so try to imagine where it's gonna be in the next 20 to 30 years. It's never gonna be too late to invest, and you're never just gonna be buying in at the complete top, because if you're looking down the road and you're thinking more long-term, this is where you want to invest your money. When you're looking to invest in something like the S&P 500, you kind of just have to go into it with the mentality of the longer I wait, the less money I'm going to be making in the future. You don't want to just wait for a crash or just keep waiting for a 10, 12, 15% correction, whatever you're thinking. You just want to put whatever amount of money you have available to work as soon as you can. So definitely check out this ETF because it is by far one of the best places to invest your money for long-term growth. So that's it for today's video. Let me know in the comments down below what your favorite ETF or index fund is to invest in for the long term. And if you found any of that information valuable, please do leave a like and subscribe to the channel. And I'll see you guys in the next one. Peace.